The US dollar stages a rebound after better economic data, but here comes a huge week with NFP data eyed. How is the dollar going to react, guys? Ken Chigbo back with another fundamental and technical update. Let's jump straight into this. So guys, after consecutive weeks of selling pressure for the greenback, it has staged a rebound. Now, if you remember in my last YouTube video, what did I say? I said at the start of the week, we were very likely to see some dollar downside, perhaps a little bit consolidation, but towards the second half, in the second half, the latter stage of the week, we're going to potentially see that dollar rebounding, and we saw exactly that. Now, if you look at my screen, guys, I really need you to tune in here because this is massive. This is pivotal. Now, remember how I said this was a big thing that we pair back the start of, the 2024 gains. Remember this ascent, this push to the north? Let's quickly recap it. We had three key pillars that are supporting the greenback to the upside. One, inflation remains sticky. That leads us on to the second point. If inflation's sticky, what do we need? We need higher rates for longer. The FOMC left the interest rates higher for longer in terms of their stance. They weren't looking to cut rates until inflation came down. Three, economic data was solid. We were just seeing banger after banger after banger. Data was just beating expectations. But then come mid to late June, early July, the dollar started to decline. Those three pillars eroding, inflation cooling, the FOMC starting to talk about rate cuts to come, multiple cuts for this year. And then data was just lackluster. We weren't seeing great data. Jobs was softening in the labor market. Consumer spending was going down. Retail sales was bad. Okay, now we're back to this week. Let's talk about it. After pairing back this, we've now come to a big psychological area, this sort of 160, 50 area. And now's the time to potentially buy back after being so oversold technically as well. We were oversold, and you've got to remember, I stressed this before, the dollar is the reserve currency of the world. We can't continue to sell it, and it be done. 99.7% of business is still done in dollars. The dollar is attached to the largest economy in the world. It's going to be picking up in terms of safe haven flows when we have the economic downturn. Okay. Anyway, going back to one of those three key pillars, economic data, if we look last week, we're going to go over it as a whole. Consumer confidence, solid, beating expectations, 103.3, previous revised higher. Why is this important? If the consumer's happy, it's great for the economy. The consumer is a key part of the economy. If they're happy, they're going to be spending their money, stimulating the economy, all of that. They're solid. GDP, quarter on quarter. Look here on Thursday, 3%. Smashing expectations of 2.8 and higher than the previous. If the economy is still expanding quite well, that's still somewhat inflationary, right? We've got a healthy economy. Why do we need all these rate cuts if the economy is still being stimulated and growing faster than what the markets expect? More importantly, GDP price index. This is the prices of all the goods and services that make up that GDP number. The prices of all those. The prices are higher. 2.5%, beating expectations, higher than expected, higher than previous. That's inflationary. Now you have to keep that in your mind a minute. We're going to come back to that. Look here, Chicago PMI, 46.1. One sec, I've just missed something else here that I've filtered out. Bear with me one moment. Okay, because this is also important. It came out of the core PCE, the Fed's preferred measure of inflation. So Fed's preferred measure of inflation still sticky, 0.2%. I consider that sticky. Personal income, what people are getting, their money, their income, that's elevated at 0.3%. If we got more income on a personal perspective, what do you think we're going to be doing? We're going to be going out spending. We're going to be still stimulating the prices of all these goods and services. We're going to be buying, using these goods and services. That's inflationary. Okay, keep that in your mind. Stay with me. Stay with me. Personal spending, higher, 0.5%. Higher, in line with expectations, but higher than previous. And then look, let's round off here. Decent data there. Chicago PMI, 46.1. Bring that all together. The markets are thinking about the FOMC in September, right? We've got that meeting September 18th here. Right, September 18th, next meeting. Markets have 100% priced in a cut. They've 100% priced in that 25 basis point cut. But when we've priced something in, we always want more. The markets want more. We don't just want expectations, what the markets are expecting, because otherwise we're just going to do the opposite of what we should in terms of the reaction. When we cut rates, really, we should weaken. But given that's priced in, the dollar will strengthen if we just cut by 25. Now, if you look down here, there's a 30% probability that we're going to cut by 50 basis points. That's what the markets want for a dollar reaction. For the dollar to sell, we need 50 basis point cut. But given the fact that the economy is still performing relatively well, Jerome Powell and the FOMC would be pretty much a little bit crazy if they go and start cutting rates now by 50. Why? If we cut rates, remember guys, you must not forget, if we cut rates, we're lowering people's costs. If we're lowering people's costs, what are they going to go and do? They're going to go and spend. They're going to go and spend. And that's going to cause problems again for the FOMC potentially because it's inflationary. Do you understand that? So my point is, I don't think we're going to get a cut by 50 basis points, which if we don't, that's what? Dollar positive. Okay. Now look here, this week, this is very important because this is labor market week, guys. ISM manufacturing PMI is important, but this is labor market. JOLTS job openings, keep an eye on these, okay? Because it all sets the tone heading into non-farm payrolls on Friday. Expected decent amount of jobs being added there. The ADP employment change expecting a better rebound here this week. This month, 136,000 jobs being added. Unemployment claims still expect to remain low. Okay, but fast forward, look at this. Average earnings expected to be inflationary, picking up to 0.3%. 164,000 jobs expected to be added to the economy. These are all decent numbers. And the unemployment rate expected to come down to 4.2%. We've got less unemployed people. What does that mean? It's inflationary. Spend. More people spending, stimulating the economy. Inflationary. So are we really going to get a surprise cut of 50 basis points from the FOMC? I think it's likely. I don't. And what does that mean? Dollar positive. So look here at the greenback, as I say. Now, if we look next, major resistance, we can certainly challenge 103, guys, to the upside. We can challenge it. Okay, we can really challenge this to north. So I do expect to push to the upside, and I expect the data to support that this week, guys. By the way, we're in September now. This is where everyone's returning to the desks from the holiday period. Volumes expected to pick up. Market volatility expected to pick up. We've got a number of talking points in the markets right now of all this central bank action, risks of recession, all of that. And now is more important than ever if you want to seriously level up your whole trading game. Now is more important than ever to have your finger on a pulse. And every single day, okay, I get the TFTC premium community market members ready for the markets, ready to tie these fundamental themes, the narratives, everything. It can be overwhelming, but I simplify it every day as our rundowns, looking at trade ideas, everything, getting them to tie hand in hand. Macros, fundamentals. Yeah, macros, fundamentals, technicals. It's going hand in hand. Okay, so don't hesitate to check that out if you want. And as I always preach it because I don't ever push anything that's crap. Okay, you can see the energy I put into this value that I provide you. Always, every day, I'm thinking, how can I provide value to people? And I put a lot of my heart and soul into that fundamental bootcamp course, which you can check out via the link in the description if you're serious about leveling up and want an extra edge in your trading. Check it out. Back to this. Now, on the flip side, did capitalize on this late last week with TFTC members. There's some shorts for euro. This does look a bit bearish. I just want to quickly show you, I'm not going to go into detail about things. We do this in the TFTC premium community, but look at last week for euro. Inflation's cooling. German CPI down, Spanish CPI down, Eurozone CPI down 2.2% from 2.6. Okay. Why is this important? Well, it gets us closer towards rate cuts from the ECB as well. Okay, that's a very bearish candlestick there last week. If you look here on a daily, support gave way at 111.50 psychological area. And now you can see where we're heading. We're coming back towards 110. Okay, and when you drop down to the 4 hour, you can see how clean things were to trade. Bearish flag breakout, pennant breakout. Next target area is psychological 110. We're essentially reversing some of this upside move. Remember, we had this inverse head and shoulders, left shoulder, head, right shoulder, breakout retest, push the upside. And we're probably coming all the way back down there. Sub 110 towards sort of 109.80. And again, in terms of how that southbound train, how much that southbound train intensifies, comes down to the dollar this week. It's all about dollar. Okay, guys. So I feel like I've given you enough value there. As I say, if you found value in this video, please do smash up that like button and a subscribe and drop a comment because it all helps. It all keeps me motivated and wanting to provide you value. I love providing you guys value anyway, but just if you want more, there's other videos that I can do, which we will going to go into soon. I've just been wanting to do these videos for now, keep you guys in tune of what's happening. Then we've got some more educational stuff planned. Other than that, stay lit, stay blessed, have an amazing week. Let's get it started.